The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 8th magical Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there's having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. It's right. When you and I make that one little 2x4 shift, means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. Right now is just fine. 877-927-6648. No problem if you can't call in. You can let your fingers do the walking. You can always send me an email, steve@tfnn.com. And inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on magnificent and magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow down 11 points. Trading out at 25,285. S&P is up about 2744. NASDAQ 100 is up 0.3%. Leader out here, percentage-wise, is the semiconductor index, up 0.8%. So we'll take a look at that. Wilshire's up 36 points, only really a little over 0.1%. The trannies are having a nice day, up 0.6%. At 61 points, or 10,973 is its print. Gold's off $3.50. Silver's down 17 pennies. Light sweet crude up 8 cents, so basically flat out there. Leading the charge here to the upside, it is Priceline up $41. Tesla's up 18. Amazon up 15. Universal Display Corp up 13. Arista Networks up 13. So plenty to look at to the upside. To the downside, you've got Biogen, BIIB, Regeneron Pharmaceuticals. They're off 4% and 3% respectively. Dave & Buster's, PLAY is the ticker symbol, down 21% with volume of about 5.6 million. I'm guessing that's pretty good volume for it. Sage Therapeutics off $9 or 5.5%. So there's plenty to look at to the downside. Of course, I want to look at what you want to look at. No sound? Is that what they say? No sound? Turn up that sound. Folks have got to hear what it is that we've got to say out there. Let's go take a look at, what do we want to look at first out here? Good here in the studio. Okay. Let's go take a look at the sector that is struggling the most. I think that's a place to start. That's the XLV. So let's go take a tour. Let me get up a couple of other charts out here, and we'll take a look at the XLV. And when I say a couple other charts here, I'm going to go ahead and put up the market profiles, daily, weekly, and monthly. So if you're watching this on TigerTV, inside the Tiger's Den, the chart on the very left-hand panel of my screen is the daily. Center is the weekly, and the very right is the monthly chart out here. Now, what we can see in this here, just in one fell swoop, allows us to see where price is trading in relationship to its market profiles, its task market profiles, on all three time frames out here. And when you're above the top of a box, well, then it is said to be bullish. In fact, I would say that it would be bullish unless there is some other pattern that is in play out here. This is one set of charts that we can look at. We can also come over and take a look at Stevie's other set of charts that has numerous tools on here. We can see the A to B equals CD pattern that may be in play out here. Now I'm just looking at the short one. By the way, that A to B equals CD pattern that my eyes saw looked like this. And we can see that the XLV on a short-term basis made a 1-to-1 A to B equals CD, a little bit higher than that. We use this as guidelines. That was in the 85.10 level. Right now, as we speak, we do have a bearish reversal signal that would then say, if you were long the XLV, doesn't say sell it, says anticipate what the next move is. Well, this chart says the next move is a retracement back to the 84.18 level. Now, that number is going to change a bit, but that is Stevie's red line. We always pay attention to Stevie's red line, especially when, as we look at these other charts out here, we would say that support is going to be the top of the boxes. That's 83.21 inside the daily time frame, 80.61 on the weekly, 73.99 on the monthly. Now, let's take a look at this monthly chart out here and see what we can see. I've got a monthly A to B equals CD. That's off of the lows out here back in August of 2015. That was my A point out at 56.63. The B point happened to be the month of August 2016. That was $76 even Steven. Nice little 50% retracement into November 2016. The 1-to-1 A to B equals CD here is 85.33. Does that mean it's over? No, it does not. Does not mean that at all. In fact, the XLV ought to go up into the 90-60 area longer term when it finds a bottom out here. At this stage of the game, we're going to have to go with that potential bottom is going to be 84.18. Just call it 84 bucks at this stage of the game. What you know, what I know, what we know is if we close below Stevie's red line, there's more retracement to come. Duh, you say. Hey, just try and do this. You got to take this one step at a time. And that next step would then say the top of that daily box would be the place to look. And that 83.21 level. And that is the healthcare sector, the XLV. You know, let's take a look at the XLF. We don't really spend too much time on the sectors out here. Let's see what's going on inside the XLF out here. Not a whole lot. Really a bunch of sideways movement since the middle of December out here. I wonder what the profiles look like and some volume patterns. I like to look at the volume on these Blackie signal charts for sure. Much easier to see. I put in XLV. That's what I got. We were talking about the XLF, the financials. What I wanted to take a look at here, longer term, is take a look at the A to B equals CD patterns here. Here's a swing point that my eyes go to. That's the week of February 27th. That had a volume of 307 million shares. When that was passed, the confirmation of that A to B equals CD came the week of November 27, 2017 out there. Now, that's pretty well past that B point, but, you know, that is where the volume. Hey, let's do this. Let's just do the shorter A to B equals CD, the more conservative. What do you mean shorter? Here's the A to B equals CD pattern inside of the XLF. That's going to give you a price projection of $28.99, more likely $29.84 to $30.92. That is two of the sectors inside the S&P 500. We get back from this first hard break out there. I'll check to see if anyone let their fingers do the walking. If not, we'll just take a tour around and see what's of interest or should be of interest to you. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. If you haven't tried David White's daily trading newsletter, The Path of Least Resistance, then this month is your perfect opportunity. On January 17th at 5 p.m., Dave will be hosting a special subscriber webinar where he'll be presenting on the newest feature in his newsletter, short-term sector charts that work on both the madness and wisdom of crowds. Join Dave on January 17th as he describes the method he uses to recognize these signals on a sector-by-sector basis, and as he discusses how he used this new tool to buy the gold miners in their seemingly darkest hour in December. And all new subscribers get a 30-day money-back guarantee, so you have nothing to risk. If you're a trader scouring the market for the next great trading opportunity, then now is a great time to sign up for the Path of Least Resistance. For all the information and for details on Dave's subscriber event taking place January 17th, visit the front page of TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So Bob writes in. He says, hi, Steve. Happy New Year. I say, hi, Bob. Happy New Year back to you. So it looks like Ford Motor Corporation has broken out. Could you give me your analysis on that? So let's go take a look at Ford. And, of course, it all depends upon really the time frame perspective. When you take a look at a breakout, the time frame perspective that you're looking at, because, you know, the data inside the chart, for example, if I put up this daily chart out here, you would have to look at it and say, hey, Bob's onto something. Really has broken out here. The last swing point on a daily basis that it was dealing with was December 4th, 39 million shares. And you can see that was crossed with about 37.5. We're going to call it even Steven. From a volume perspective, it was 46 million on Friday. So, yeah, you know, this thing is broken out above a resistance level out here. But that's only looking at this much data. To get a bigger perspective on the breakout and maybe where things are headed to, Bob, in Ford, I'm just going to simply punch up the monthly chart. Now, this really paints a picture, right? Because we've got more data squeezed together. Squeezed, the right word, or should I say squoze? I don't think squoze is the word out there. But nonetheless, it doesn't really matter. Let's not get caught up into too much grammar here. I'm not going to teach grammar school. That is for sure. But if we do take a look at Ford, we can see this thing has been consolidating really for quite a period of time. That quite a period of time, let's just draw the rectangular box in here. And you'd say that the consolidation, for the most part, began right back here. We didn't know it at the time, but we do know it now, which was in December. Yeah. Of all times, December, not that that's the issue, but it was December of 2009. So Ford has been consolidating, Bob, between a price level of about $9 and change up to about $18 and change. So a nice little $9 consolidation area. Now, this last time down, when we take a look at the monthly chart, price never made it down to the bottom of that consolidation. Didn't even make it down to the bottom of the swing points. which would have been in August of 2012. What we knew was there about 700 million shares being pushed down there, 848 on the month of July of 2012. And what we can say is that similar volume in August of 2017 in that 700 million range. But on this monthly chart out here, yeah, I see a breakout just simply from just drawing a trend line from within inside this rectangle. If we just look at the tops, I don't know why it chose yellow, but it did. And you can see that, yes, on a monthly basis, what this suggests to you and I is Ford is headed back to the top of its consolidation. So you're in this move. That looks pretty nice. You should anticipate over time, I can't tell you how long it's going to take, but it does look like Ford is headed back into the $18 area. You're at $13.22. So looks to me like you have a good trade out there. Is there anything else that I can find for you? And the answer is going to be probably not. Let's go back to this daily time frame chart out here. Let's draw a smaller A to B equals CD pattern since we've been so fixated on those here. And I would say the longer one off that bottom is going to take our E point back towards the bottom of that consolidation, August 2017, right? Never made it totally to the bottom because that low was out here at about $10.47. The B point on here looks like, and you could use kind of a few, but we're just going to use what looks like November of 2017, November 1st, pulling back in, small retracement in November 15th, and the one-to-one, and that volume was 44 million shares. It was passed with 64 million shares on November 29th. So the B point taken out with wide price spread, accelerated volume. This suggests, Bob, that you're looking at 1387. Now, I would say more likely than not, 1387, by the way, is your one-to-one A to B equals CD. I say hogwash on that. And I don't really think that this is going to do a one-to-one level. This thing was coiling like a cobra. How do you like how I integrated a Cobra into Ford? Yeah, I thought that was pretty smooth operator. In any event, it looks to me like what Ford should do. You like one of those Would you like to have one of those original Carroll Shelby Cobras? Hey, even the kit is a lot of fun to ride in. A bit loud, so make sure you take your earplugs when you're driving on that puppy. But it looks like 1441, 1511 more likely. So when we put that together with the larger term consolidation, all I can say is nice trade / investment at this stage, and just watch what's going on as price gets up into the $18 area is what I should say. So thanks for writing. Happy New Year to you. And let's see if there's anything else. I don't see anything inside the den. So you guys and gals must be sleeping. I must be putting you to sleep out there, but that's okay. No requests. So let's do this here. I know somebody out there. I'm going to do one of those Karnak things and hold an envelope up to my head. It's going to be a fake envelope because I don't actually. Oh, I've got an envelope here. I can take this out. We can do the whole Megillah. I think we can. Yeah, here's a blank envelope. We can do a Karnak, right? I can hold this up to my head, and somebody is saying, "Hey, Steve-O, what's the GDX doing? Why is that thing pulling back? Down 27 cents, 23.41 is what it's trading at. So let's go answer that question. Of course, most of you know the answer already, right? So we take a look at it. It's pulling back to what? To Stevie's red line. Very close out there as we take a look at it. Stevie's red line, let's see here, 23.21 is the actual number. Where price has gotten back down to is so far has been 23.28. So it's really close. Why are we paying attention to that, you might ask? I don't know. It just sounds good. No, it's for a reason. It's for a really good reason. And the reason is this. Because a few days ago, what we saw inside the GDX, the mining ETF out there, specifically on the trading session here of January 3rd, when it had that nice wide-ranging bar to the upside, what it did was it went ahead and took that price oscillator, the very bottom panel of our screen, up towards zero, really right at zero, just slightly above zero. And what you and I know about patterns, wide-ranging bars or otherwise out there, is when that happens, things slow down. Now, does it happen all the time? I wish that it did. But it happens such a high percentage of the time, we can expect and anticipate it. And that is a beautiful thing. What is it we're anticipating? That the move is about to slow down, and we're going to go see a test of Stevie's red line. Has that test happened? No, not exactly, but pretty darn close. PDC out there. And what we're looking for, well, that's if you are long the mining equities, which I am. What we're looking for is a successful test. We're looking for price to test that level, and then for a little bit of a trampoline effect. Now, it doesn't have to be an immediate trampoline. We just want to see price stay above it. Now, if price trades below that, closes below that is what I should say, does that mean the move is over? No, but it does mean the road ahead could be a bit bumpier. That's all that it means, as long as this price oscillator, difference between the 39 and the 19-day exponential moving average, and that's brought to you by a rocket scientist out there, and that's why we go with it. That's what we're watching for. Now, where could price pull back to if it closes below Stevie's red line? That's an excellent question. Of course, we know the answer to that too, right? We would just simply go take a look at our task market profiles. We'd put in the GDX and we'd say, hey, where's the bottom of the daily profile? And the answer would be 2280. So where's the GDX headed to? 2280 to 2321 as we speak right now. We're looking for a successful test. You want to see a successful test, because then it's headed much, much higher. Steve Rhodes to TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. This is the 1 minute chart here for GoPro, and which came out with some pretty poor news earlier in the day, and this thing got crushed volume-wise. Not some 1 minute chart that we're looking at, but got down to as low as 504, and I saw something flash across my my boob tube screen out there that the GoPro executives have asked J.P. Morgan to see if they can find a buyer, and we can see that must have hit the wires at 13.18, so that's 118, because we've seen quite a move, really, and there's some decent rumor volume behind that move for sure. That was from a low of about $6. You're now at 709, so certainly a pretty decent percentage. What do I recommend you do? Not a darn thing out there. But that's on GoPro. Nobody asked for it, but it came floating across my screen. Kind of a slow day out there. Must be everybody preparing for the big game tonight. Why do they have to start that game at 9 o'clock? Don't they know the senior citizens are in bed by about 8:30 out here? Why do they? It's 9 o'clock, isn't it? I think that's when that game starts. Who's going to win? Is it going to be the Crimson Tide, or is it going to be those Bulldogs out there? Hopefully, it's a good game. That's all that any of us can really ask for. The question's going to be, if it's a good game, well, then I'll go ahead and I'll keep my eyes open. 8 p.m. Is that when the game is? Is that when kickoff time is, Jay? Showtime, 8 p.m. out there. In any event, either way, it doesn't matter what time. The culmination, I just wish it were just a bit earlier out here. But I know you got to get the West Coasters in on the game, so on and so forth. Prime time, right? In any event, let's get back to the markets. I don't know where we want to go back to. Sophia from Tampa. Hey, that sounds great, Sophia. Thanks for calling. Thanks for holding. Happy New Year to you. How are you?
Hey, Steve. I'm good. Thank you. And Happy New Year.
Thank you.
Steve, I need your help here. One is on X, United States Steel. I kind of exited a good position a couple of days back, and I re-entered on Friday at the lows. So I'm okay right now, but I need you to tell me where what stop you would place, because I'm in at a full position here. I went in full, And then secondly, on Roku, please. I entered Roku this morning, and just give me your take on that one, please.
Sure.
And so I will go ahead and hang up. I'm in at Roku at about 43.27, and I'll hang up and listen to you online if you don't mind. Okay?
You can't hold. No, not just yet. I have a couple questions. I've got a couple of questions. Yeah. So on U.S. Steel, you were in the trade. You got out of the trade. You're back in the trade. So when you originally got in, give me the time frame that you're looking at here, because that's really, it's not a problem that you were in, you got out, but what was the time frame, and has that changed now? Just so I can understand what you were trying to accomplish.
Well, my time frame was originally, I was in around that 27 mark.
Okay.
And it was just a silly exit, I'll be honest. I don't know why.
But did you have a longer term objective in mind? When you originally entered it, you were looking for, your outcome was what? A much longer term trade?
My outcome was, and I talked to you about it too. It was that first leg up, which was on that one candle on the 15th of November, and then the first leg A to B to the $34 mark, which was on the 11th of December. And then, I just want to ride the B to C then. And I exited early.
Okay. Well, so that's good. I've got that. And on Roku, is Roku just a trade? What's the and then you can go ahead and I'll go through those for you, and you can listen in.
Sure.
But just so I have my mind understanding what you're.
Here is the thing. Roku is just a trade because I'm nervous with it, but I'm looking at a B to C leg, if it is, and if it's possible, with that C, the C to D starting now.
Yeah, being the low. Okay, great. Thanks for that input. So
Okay.
I'll go back and take a look at U.S. Steel first. In U.S. Steel, we've got more information really just to gather. When I say more information, we take a look at U.S. Steel again. I'm just starting with the longer-term chart out here. And that longer-term chart, the monthly chart, does show that it is up against a resistance level. So the mere fact that you did exit, instinctively, I don't think it was a bad exit when you say it was a silly type exit or what have you, because it really is up against resistance. Now, that doesn't mean that you have to sell and that the move is over. I'm just referring to the monthly time frame chart. And the last time that price was up in this area was back in February 2017. There were 372 million shares that traded hands. And last month in December, 201 million shares. We're too early into the month to understand what this is going to turn out to be. Although with 5 days of trading, it's 50 million, so that's about 10 million shares a day. 20 days is about 200 million. Doesn't look like it's ready to really take out the last time price was up here in February of 2017. If I go back before that, it was about 160 million in September 2014. So, what you would like inside of U.S. Steel when I bring this chart back like this is you'd love to see the possible B point on a monthly basis get taken out. And I'm using February 2017. So you asked for a stop. And I'll go ahead and give you something to consider for a stop on a daily basis. But if price can take out the 41.93, then you're getting into a price projection of 54 and 64 out here. And when we go ahead and we pull this chart back, what that does is really get you back into the highs from 2010. So this would have a long way to go in order to accomplish that, meaning to get up to 70.95 out there. But that's the longer term. With regard to the stop, and you've entered this, if it wasn't up against some areas of resistance, maybe you could use a wider stop. But the stop piece of it should be the thought prior to getting in on the trade, because how I like you to use stops, or anyone to use stops, is think about position sizing, because you said a full position, as I recall, and a full position to me means you first define what your risk is. And if your risk is 1% or 2%, I say you stay somewhere in that range. We'll just use 1% at this stage. And what I mean by that, it's 1% of your portfolio or your available portfolio. It has nothing to do with the price of the stock. The very first thing that we do is we take a look at what is 1% of our trading capital. And if it's $100,000, just for round numbers here, 1% says you can risk $1,000. When you then decide how many shares you need to purchase, you're dividing that $1,000, your risk, by your stop. That tells you how many shares to buy. We know the average true range on this is $1.09. We like to use an expansion of average, because if we do something average, we're going to get S results. Exactly. Not very good. So multiply $1.09 times 1.618. That would be your stop. Figure out, position-wise, if you are overweight, underweight, or right at the right weight. Steve Rhodes with TFNN. We'll be right back. I'll explain that just a tad further.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So for Sophia, we're just simply taking a look at U.S. Steel. We've kind of gone through the analysis there, and we're going to go take a look at Roku. But the more important thing for each of us to always do out here is the most important thing that we can do with regard to any trade or any investment is to protect our capital. The name of this game is protect your capital, keep your losses small, and make those decisions before you enter the trade, because it is when you are the most neutral, I should say. I mean, I get it that you want to take a trade, but you're most objective, right? Maybe not neutral, but objective here. This is the money business game. And what you do is you take your trading risk capital, whatever that is. Any dollar. I'm using 100,000 just to simply try to keep things easy. And I always suggest you risk 1% of your trading working capital. And the reason is because you can have like 360 losing trades in a row using your techniques, and you still will have some capital left over. You will stop with that technique well before you get to that out there. And that's how the game is played. That says 1% of 100 grand is $1,000. That's what I call your risk dollar. I like to look at what the average true range is. Most software packages can go calculate that. That happens to be the bottom panel out here where it says $1.09. That means in this case here, I look at the last 10 trading sessions. This tells me that on an average daily basis, this will move $1.09. Now, we know that's not necessarily the case. It's an average thing because there was more than that type of move on January 2nd inside of U.S. Steel. But you have to come up with something, and that's what I suggest you do is use the average true range. Then multiply that. I like to use the Fibonacci expansion number. I like 1.618 as the expansion because if price is going to expand by 1.618 of the average true range, something else may be going on, and you need to stop and assess. You can always come back in, get right back in on that trade. But it's so in this case here, it says the suggested stop would be $1.76. $1.09 times 1.618. If you were just entering the trade today, you and I, we'd said, hey, we're going to go, shoot, Stevie just saw that this thing is busting out, it's heading out. Let's go ahead and get on the momentum piece of this trade here. What this would then tell us is on $100,000 in free trading capital, you could buy 567 shares. Because what that represents is the $1,000 risk divided by 1.76. So, you round it up. I don't buy 567. You go 575, 550, whatever it might be, just to give you that range. If you don't like the $1.76, or which means if you don't like a stop of 37.08, then you can just simply increase it. And it'll automatically, just your math formula will adjust that. Maybe you like $2.50. Now it says, hey, 400 shares that you want to have out there. So position sizing is the whole key to this beautiful, this wonderful game that you and I get to trade. So I didn't mean to belabor on that, and that wasn't really, I wasn't speaking to you, Sophia, as much as I was to everyone else that might be out there that hasn't even really considered position sizing. So let's go take a look at Roku. With regard to U.S. Steel, here, let's do this because you were taking a look at A to B equals CD patterns. We're looking at a B point now, short term, from December the 11th. That had a volume of 11 million shares. When that was passed, it was passed with 11 million shares. So this is confirmed, and then you had that wide price spread on January 2nd. So with regard to your current trade out here, I would say what you're looking at, the signals here inside of U.S. Steel, is that it should head up to about the 40.04, maybe even 42.45 level. The 1-to-1 and the 1-to-1.272 A to B equals CD. So I want to make sure I covered all those bases with you. With regard to Roku, you're trying to catch this as the C point of an A to B equals CD. The question on this becomes, man, where are you using for your A point? You could use December 6th. You could use maybe November 22nd. I'm going to go with, just my instinct says, for a short term, because this is just a trade, and it's not confirmed A to B equals CD by any stretch of the imagination. But if it is, your A point on here would be December 6th. Your B point would be the trading high at December 19th. And your C point, obviously the low of this morning. And that really just gives you a 60, when I say that just gives you a price projection of 63.78. Not too much above your B point out here because it was 0.786 retracement. My screen says 76.27 because it's calculating it exactly, exactamundo. So stay in this trade. Let's say you stay in this trade. What your real guide is going to be, Sophia, is as price gets into the 53.92 level, that's the bottom of December 19th, ideally, you'd like to see acceleration with volume, meaning more than 11.3 million shares. If it doesn't do that, doesn't say it can't take it out, but it starts to get a bit risky. We don't have anything on the left-hand side of this chart for Roku, any really great technical information to really assess it more than that. At least I don't see anything out here. That doesn't mean it's not a good investment or trade. It's just technically we're challenged. Heck, I'm challenged anyways, but now I'm doubly challenged with regard to having a lack of data to really look at out there. In Roku, do the same type of thing with regard to its average true range out here. The average true range is $4.05. So you got in this morning. We can do the same thing for you here. Let me just change this here. This formula equals this times. So we'll just do this for blanks and giggles out here. Now, let me see. So this was, what, 405. So all we have to do is go put the average true range, 4.05 out here. Use 1.68. This says you should use a stop of $6.55 on that. That would say if you had a full position, assuming you're going with a 1% risk out here, you would have a stop of 153 shares, is so around that range. The stock is selling for right now 47.81, so I'll go with 47.81. And this would say your stop would be somewhere around 41.26, which is below today's C point. So to me, that would be the logic that I would use out there. What do you do if you have more than 150 shares out there and it's more risk than you want to take? Then you can trim it down, or just make sure that next time you consider using the position size tool or technique before you go ahead and enter the trade. And then if the trade goes against you, it's 1%. Now, you can get stopped out below. Your stop can get jumped. So sometimes you will lose more than 1%, right? Something gaps down for whatever reason. What do you do then? Make sure that you have a market order for your stop. Just make it simple. Get stopped out, come back, reassess, figure out what you want to do. But just simply reduce your reduce your risk all the time, which means, geez, it jumped my stop. Now what do I do? You should always know what you do. Close it out, come back, and reassess, because you can always get back in. And you prove that you are excellent at doing that, right? You got out of U.S. Steel, had a profit, said, you know what? I want to ride that horse a little more. Maybe U.S. Steel is like a Seabiscuit at this stage, and you wanted to ride that horse. So thanks for, hopefully that answers all of your questions. If not, call back, send me an email, anything along those lines. Hector wants us to take a look at SQ. So we're going to do that when we get back from this break, and then try to answer the question, will gold pop from 13.15? And if over 13.27, where's it head to? Steve Rhodes with TFNN. Be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. We're going to take a look at gold and go over to Square. In the case of gold, the question was, will it pop from here around 13.15? If over 13.27, where does it go? I don't know if it pops from here. I'm still looking for either sideways movement in gold or gold to pull back and test Stevie's red line. That red line level's at 13.02 right now. If it's sideways move, my red line keeps moving up. But I want to see a test of that. I want to see that test take place. Then when that test takes place, and if it is a bullish test, meaning price stays above Stevie's red line, the answer to your question is where does it go next? That's pretty easy. Where gold heads to is 1462. This is a monthly time frame chart out here. Above 1324 and really above 1377. These are the horizontal trading ranges for gold, and 1462, is that what I said? 1462 would be where it would head to. Now, Garo must be loving. He's listening. I hope he's listening. Here's the daily chart for Square. SQ is a ticker symbol. And Square on Friday gave him that nice little signal that he likes, which was that price moved above one of his parabolic SAR dots. And he had the 5-21-day simple moving average crossover. Then he goes down and takes a look at a shorter-term time frame. But that wasn't the question. The question from Hector in Murrieta, California was, can we look at SQ, looking at a 3-month window, thumbs up or thumbs down? Right now, we have to give it the thumbs up. If we take a look at the market profiles out here, watch to see if Square, you're not in this trade, can close above 41.85. If not, you should be able to buy it on a retracement. Retracement back to where? That's an excellent question. A retracement from somewhere south of here, 38.77 might be a level that I would be looking at. I can see, so here's what's happened in Square on the daily chart. See, that's the resistance level of its weekly profile. Here we had Square just get above on Friday, that price oscillator line back above 0. But it was really a successful test. Price might not pull back, but I'm giving it the Garo and Steve-O thumbs up. Folks, stay tuned. Your favorite polar bear and mine, David White's up next. Tom O'Brien from 3 to 5. I'll be back with you on Terrific Tuesday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.